Hello and welcome to Business Morning. I am Bisi Adibayo. We begin with the federal government's approval of a 5 billion naira bailout fund for domestic airlines and other businesses in the aviation sector to cushion the impact of the COVID-19 pandemic. The Minister of Aviation, Senator Hadi Sirika, announced this during a public hearing on 6 executive bills intended to improve the standards as well as effective management of agencies in the aviation industry. This comes as the House of Representatives has called for the suspension of the planned concessioning of 4 of the nation's airports. Let's see the report.
The global aviation industry has been badly hit by COVID-19, and Nigeria was no exception. Some of the negative impacts of the pandemic on the Nigerian aviation industry include closure of airports, job losses, and increasing industry debt profile. Following that, the Senate Committee on Aviation had called on the federal government to bail out airlines. At a public hearing in the National Assembly, the Minister of Aviation announces the federal government's bailout fund for airline operators and other business owners in the aviation sector as part of its intervention to cushion the effects of COVID-19.
The federal government has provided 4 billion naira for airlines and 1 billion naira for other businesses within the civil aviation. We are putting criteria for the disbursement of those funds, and once it is done, it will be transparently done, and they will be so disbursed.
But the chairman of the Senate Committee on Aviation says the amount is grossly inadequate to ameliorate the impact of COVID-19 on the industry.
I do not think, sir, with due respect, that 4 billion naira is what we are talking about. If you look at what is available to airline operators globally, in the nations of the world today, if you really want to keep the airline operators in business, and we don't want them to park the planes and send people home, I think the federal government should take up the problem of this industry with all the seriousness it deserves.
Well, you're welcome.
Meanwhile, the House of Representatives Committee on Aviation is calling for the suspension of the concessioning of 4 of the nation's airports, pending the resolution of issues raised by the aviation unions and other stakeholders. Committee members are unhappy that the minister failed to attend his ministry's budget defense session, where the issue of the concessioning of the airports would have been discussed. But in an interview with journalists at the National Assembly, the aviation minister explains that his absence was not deliberate.
A lot of concerns were raised by the representatives of the labor union regarding the airport concession. Based on the outcome of the meeting with the labor union, the committee invited the Minister of Aviation and the heads of agencies and other agencies under him to discuss the issues of the airport concession. Several dates were fixed for the meeting, but for one reason or the other, they failed to attend.
I was meant to be here in the Senate for 10 o'clock, whilst theirs was for 11 o'clock, and we duly informed them that we'll be here for this very, very important Civil Aviation Act review. I am going to appear before House of Reps. I would love to appear before everybody, before Nigerians, to discuss this policy of government to continue the right way to drive the roadmap of civil aviation, of which concession is part of.
The House Committee is yet to announce another date to meet with the Minister of Aviation. Linda Akibe, Channels Television News.
Now, over the weekend, the federal government marked the maiden National Youth Day to celebrate its youth population. This comes at a time when the yearnings for good governance metamorphosed into the widespread and much talked about NSAS protest, putting the government on the edge to deliver reforms that will be evident in the socio-economic landscape of the country. The National Youth Day, which was approved by President Muhammadu Buhari in late August, was created to find solutions to the issues that affect the youth.
It is the first time Nigeria is dedicating a day for youth.
I dream of a Nigeria where our course of study actually teaches us innovative things that could help us solve the many problems in our country.
Poetry, dance and drama performed by young people excited for the prospects of a future where their government does not ignore their existence.
round of applause, please.
The National Youth Investment Fund, approved by the Federal Executive Council in July of 2020, is to work for 3 years and is worth 75 billion naira. The fund aims to reach 500,000 youth annually between 2020 and 2023. Each fund approval will range from 250,000 naira to 50 million naira, with a spread across group applications, individual applications, working capital loans set at a year, and term loans set at 3 years with a single-digit interest rate of 5%. All you have to do is take a valid form of identification and a proper business proposal to any microcredit organization, the Bank of Industry, fintech and venture capital organizations registered with the CBN, and you can assess the loan.
It resonates across all strata of society. It rallies us all, government, private sector, and even the youth groups, to a new and urgent cause. This cause is to invest more and deliberately invest in the innovative minds, skills, talent, and enterprise of our youth, to make them wealth creators, self-starters, employers of labor, and leaders in their own right.
President Muhammadu Buhari, whose speech was delivered by the Minister of the Federal Capital Territory, uses the opportunity to again ask youth across the country to stop the street protests and dialogue with government on police reforms.
Let me add a word of advice to the protesters and hope that they accept it in the spirit in which it is being offered. This government extends a hand to you all to come and join in meaningful dialogue so that we can chart a way forward that will include necessary reforms needed for our police and other security services. Your pleas have been heard. Now we want to hear your concrete and practical ideas.
Awards are presented to winners of a 60-day app challenge who go home with ₦1 million each, while young innovators go home with 500,000 naira each.
I'm very excited about this because the federal government of Nigeria found us worthy, that's the youths, to recognize us for some of the things that we're doing, and we hope that state governments too will emulate this and also recognize youths that are doing so many things, because we have so many talented people in Nigeria.
While it is a step in the right direction to recognize young people who are making giant strides with meager resources, especially with the proliferation of vice in Nigeria's polity, more must still be done to improve the country's reward system if more young people are expected to embrace the path to innovation. From the State House in Abuja, Kayla Magwa, Channels Television News.
And that brings us to our conversation this morning, talking about youth development. And I have with me a data scientist and entrepreneur, Mr. Peter Eze, to discuss the issues and concerns that affect the youth and what they're clamoring for. Good morning, Mr. Eze. Thank you for joining us on the program. Let me start by asking you, what is the significance of the National Youth Day to you?
Hello, thank you very much. Good morning. Sorry, I have to do this on the way. So talking about the youth, can you hear me clearly there?
Very well.
All right, so talking about the Nigerian youth, it's clear that a lot has happened over the last couple of weeks, but I want to take it from the perspective of youthful leadership. And I want to begin with a popular thing that everybody is aware of. We've heard that the youth are the leaders of tomorrow. Youth are the leaders of tomorrow. And that statement, I want to take it from two perspectives. Number one is, if we look at that statement, it's like two sides of a coin. The first side to it is that the statement itself, the origin of that statement itself has what I can call a scam effect to it. Now, then the other flip side of that statement, that is also posing a challenge to us as youth. So when we say youth are the leaders of tomorrow, sometimes it's emanated from a primitive control structure or system where, people wanted to keep power to themselves and ensure that younger people don't take advantage of getting into the system. That's one part of it, and I can discuss further on it. The other part of it is that every Nigerian youth, from the events of the recent, needs to begin to look at that narrative different perspective that youth are the leaders of the moment, not tomorrow. Now is the moment. Now is the time, right? I listened very carefully to the interview granted to Rufai, the former minister of the Federal Capital Territory, and he said something about the young people. He said, you know what? Power cannot be given to you. You can't feel entitled to power. You have to come and be in the space and take power. So he was saying, you know what? You can't stay outside the ring and win the wrestling. You have to come inside and play. So I would say the youth are the leaders of tomorrow. Number one, one part of that statement, I don't believe in it because it's like people trying to keep power to themselves, control, and ensure that you don't come into the space to see what they are doing. They keep telling you tomorrow because today was the tomorrow you said yesterday, and it's going to be today's tomorrow. So there is really nothing called tomorrow. Tomorrow is this moment. So the Nigerian youth need to rise up to leadership at this moment. That's what Nigeria is calling on every young person to do.
Well, let's talk about some of the challenges that the youth are facing now. Speaking as a youth yourself, what are some of the key challenges that are hindering the youth from actually rising up to the occasion, just like you mentioned? What are the key challenges that you see coming from the youth and the government's perspective?
All right, thank you very much. Now, to start with, the first challenge is the challenge of education. We do not have access to quality education. Now, it's easy to explain the reason why my state could be termed almost educationally disadvantaged because they don't have access to a lot of amenities. They don't have a lot of exposure. So I can explain why my village hometown in Okosi or Hozara, Ebonyi State, and I can excuse why the people that may not get quality education. But that's not just there. I know many schools in Surulere, I'm talking about Surulere, Lagos, that students are still sitting on the window frame to take classes. I'm talking about secondary school. I know schools in Lagos State that children, pupils of primary schools are sitting on the floor. I know a school in Apapa. I'm not talking about KSA. I'm talking about schools that have even gone to sea. A school in Apapa where the roof is leaking. How do you expect the mind frame of a child that was raised in that kind of environment to be? So an average young person in Nigeria feels is already inferior. By graduating in a Nigerian university, you're already inferior because we know that BSc counts for nothing. In fact, hiring a graduate with BSc is a big risk. Now, it has graduated beyond BSc to master's degree holders. They don't have nothing to offer. So you stumble through Nigerian school. You go through a lot. There is nothing, no amenities, no infrastructure. You graduate, but whatever you come up with cannot make you employable. So you have to now go and educate yourself to be relevant in the workplace. That's on one part. As an entrepreneur, as an SME owner, as an SME player in the SME space, there are no supports. I'm sorry, but there are no supports from the government. It's ridiculous, the kind of thing our government put out on the media. So they say they have this survivor fund, survivor intervention fund for SMEs, and most times they call the big figures, 7-something billion. But so how many people are you making those funds available? The highest, the one I opened the link, the highest was about 500,000, and I said to myself, 500,000 to a micro business is a lot of money, right? That's a lot of money. 50,000, 150. But for a lot of SMEs, it's nothing. It's not some money. For some businesses that have not done anything from February or March till August, the debt they've accumulated alone is 3-4 times that money. So if you're giving me a survivor fund that cannot bail me out of debt, you're not doing anything to me. So I think some of the things working against us is the fact that we don't have access to quality education as young people. Number two, and because we are not educated, most times we don't know our rights. Number two, the fact that even when you want to hustle and do things to earn money, the infrastructures are not there to support. And then, of course, the most recent one, some officials in government are pushing for censoring or controlling the social media. So they are also trying to steal our voice. So as a young person, you are to be born and to be a young person in Nigeria is to be disadvantaged. That's the way I put it.
Well, just like you're saying now, of course, we've seen many youths today seeking to migrate to other countries because they believe that there's not enough economic opportunities right here. But is that really the solution?
Well, I don't know that it's the solution, but I know that when you push to the wall, the solution is the one that's available to you. That's why sometimes you push to the wall, you punch. Some people, they are pushed to the wall. See, the solution that is embedded in you is what's going to come out. The environment has conditioned us. Let me tell you one thing. I said this to my wife, and I say, it looks to me like a lot of us that are still in Nigeria are in Nigeria because we can't afford to relocate. Now, let's be realistic, let's be frank. We can't afford it. Because if you want to relocate, whether it's Canada or US or UK or anywhere, you still need some level of balance in your account. Because except you want to do it the legal way. You want to do it the very legal way, you need money that you can use to survive there for the first 2-3 months before you can get something doing. And 95, 96, if not 97% of young people who relocate to abroad, they are going there to look for jobs. So that's a massive brain drain. So it's not a solution. But when you look at the antecedents of our system, the antecedents of our governmental structure, they don't seem to be a near future possibility that these things can change. We thought it was a change of political power holders. So we moved from PDP to APC. But it's the same thing because it's the same people who are recycling the who are changing their clothing. So the mindset is about this power and hold it. So there is really no alternative that is looking really very foreseeable.
Mr. Isaac, the president, President Buhari, in his speech to the youth on the Youth Day celebration, advised the youth to embrace the hand of meaningful dialogue to chart a way forward for necessary reform. So why not take up this offer? What's the body language of the youth to this offer?
Trust, mistrust. That's the reason why we are skeptical taking up that offer. We don't trust what they are saying. No, the truth is that if Nigerian government tells you 10 things, 8.5 or 9 of them will have hidden clauses. Your president says a lot about the ability of me trusting you. Nigeria, the government has proven not to be trusted. They said many things that it turned out not to be true. They said they are going to give free feeding. Where are those foods? They said they are going to give. Hello.
But they've come up with several intervention programs for the youth. For instance, the 75 billion naira Nigeria Youth Investment Fund, which already has over 1 million entries, for instance.
Well, so it's still starting. We don't measure things by proposition. We measure it by achievement. Let us finish and let us see. That 77 billion that I was talking about that's the same thing I was saying. So the money has been made available. Let's see how they execute it. Execution is the problem. The same way palliatives were stacked and hoarded by some people, are we sure this money will not be partly disbursed and a large pool of it will be kept by some people? That has been the reality. So it's a good initiative, but initiatives are not what counts. Accomplishments are the things you are looking at. What have you accomplished in the past? What's your pattern? But we are trusting that this will work. It's a good initiative. And I'm hoping that this works out this time around.
Let's keep hope alive. Data scientist and entrepreneur, Mr. Peter Eze, thank you for sharing some of your time with us.
Thank you very much. I appreciate it.
We'll turn our attention to the commodities markets when we return in just a moment. Please stay with us. The head of research at the financial derivatives company, Damilola Kibami, joins us now to discuss the burning economic issues at the domestic commodities market. Good morning, Damilola.
Good morning, BC.
It's good you finally made it here after wading through hours of traffic. All right, now let's begin with oil prices. Now, they're actually doing a bit better this morning at about $38 per barrel, but that market has been quite volatile due to the lockdowns across Europe, caused by the second wave of the coronavirus pandemic. But then, what's the implication of this on Nigeria, bearing in mind that our oil benchmark for the proposed 2021 budget is at $40 per barrel?
Well, for Nigeria, that depends heavily on oil. What it means is like right now, with oil prices at 38, so there's a negative headroom of about $2 if you compare it to the 2021 budget benchmark of $40 per barrel. So that means that obviously revenue projections are going to be affected. And bear in mind that even oil price is just part of the equation. You also have to look at the oil production. And Nigeria's oil production currently is around 1.4 million barrels in compliance with its OPEC quota, and the budget benchmark for production is about 1.8 million barrels. So definitely, if you look at that with lower oil prices and oil production sharply lower, the revenue projections are flawed. And if oil prices continue to remain bearish, because if you look at the factors that play right now, the price to present factors are intensifying. And if this continues, it's definitely going to lead to a possibility of a revision of the 2021 budget, because you have to now consider the wider fiscal deficit and external imbalances that would occur as a result of this depletion in oil revenue.
Now, let's talk about its effect on our external reserves. Now, reserves are still hovering around $35 billion, and then in the Naira. What sort of fiscal and monetary response are we likely to expect to close the fourth quarter on a strong note? Well, right now, let's start from the monetary policy angle. We know that the MPC is going to meet in like the next 3 weeks this month. And right now, prior to this, in the MPC meeting that held in September, we know that the central bank actually reduced interest rates contrary to market expectations. Well, what consensus view right now is most likely they're going to maintain status quo, at least to close the end of the year. So what we're going to see is that the MPR may be left, all the monetary parameters may be left at current state. But however, the CBN still has other monetary policy tools at its disposal. So for instance, the CRR debates are there. We have the OMO auctions to maintain or manage liquidity. And in terms of Forex also, as you're managing liquidity, you're also indirectly going to be addressing the Forex issues. And bear in mind that the CBN is still selling or still has its frequent Forex interventions to the banks at the retail market, and it's also selling to the BDCs. So this obviously would help to an extent to manage exchange rate pressures. But bear in mind that because Forex receipts are depleting, we just talked about oil prices, it's still going to be a major issue. And we've seen that manufacturers, most of them are now using a blended rate because of the unavailability of Forex. So they're combining both the IFX rate with the power market rate just to be able to meet or make ends meet. And the impact of that is because Nigeria is a highly import-dependent economy. So you're going to see prices of imported items increase because the country's import bill is going to increase. And if you even go to stores now, with everything that's been happening from COVID to the NSAS protests to the looting that occurred afterwards, you're already beginning to see shortages. If you go to a lot of stores right now, you see that shelves are for some items are practically empty. So that is what is at play right now. But in terms of monetary policy, I think the CBN is just going to maintain status quo. In terms of fiscal policy, right now, what the government is going to be looking at or what they're focusing on is the budget 2021. And if market realities fall short of what has been projected, we might see a revision. We know that happened severally this year with several budget revisions made and all that. So the thing is that policy should be dynamic. It shouldn't be static. And the policy authorities would have to move in tandem with whatever is happening in the market. Now, where are we in terms of commodity prices and availability? Of course, you talked about the shelves nearing empty, talking about imported items. But what about domestic commodities? Looking at the fallout of the NSAS protests and everything is just gradually returning to normal. But where are we in that aspect?
Yes, so we've seen prices actually increase. The protests and the curfew that was imposed and the looting really affected the markets. We know commodities such as flour, rice, tomatoes, all recording price increases. Onions actually recorded an 100% increase from 40,000 naira a bag to 80,000 naira a bag.
Huge.
And the reason the marketers are given is because of the inability to move their goods around due to the curfews. Also, we know that there was a lot of disruption that occurred. So this is what is affecting the market. And bear in mind that the harvest season has ended, so we're slowly inching into the planting season. So all these factors are at play. And we're seeing consumer goods also likely going to be affected the most. I know that we're also moving to the festive season. Definitely demand this Christmas period won't be as much as prior years because we know that livelihoods have been affected, consumer spending is down, so obviously demand is not going to be as much as prior years. And also the manufacturers that are going to meet this demand, they're going to plan their inventory levels based on the available demand. So if demand has declined, you're going to see that supply and inventory levels too are going to be looked into or revised downwards, coupled with other issues they're facing, such as forex issues, lending rates. Despite the fact that interest rates on the deposit side are really low, lending rates have been sticky downwards. So these are some of the issues manufacturers are facing, and coupled with weak consumer demand. So these are some of the things that are affecting consumer prices. And we're going to see inflation most likely even head towards 15% towards October, November.
Wow, because I was just going to ask that, will the weak consumer demand actually lead to some form of reduction in the prices or decline in the prices? So
it would taper the impact. So for instance, if due to the supply issues and whatever, if that would have led to, because cost prices are increasing, that should have led to a sharp increase in consumer prices. But because there is weak demand, so it should taper the impact of the increase. So if we're expecting maybe, for instance, given a rough estimate of maybe a 1 to 2 or 3% increase in inflation, but because of weak demand, the impact may be reduced to about a 0.75% impact that will be felt on consumer prices. But there is still, inflation definitely is going to be higher than what we experienced last year.
We just have to keep our fingers crossed and see what happens. Now, we seem not to be done with electricity tariffs as discos begin the implementation of the revised tariff. But do you think Nigerians will just take it as it comes, owing to the free prepaid meters distribution to consumers under the mass metering scheme?
Well, these initiatives, if I can call them that the government has put in place, the 6 million free meters and then the revised tariffs, they're all good on paper. But then again, how are they going to be implemented? Let's start, for instance, the 6 million meters. What is the criteria for distribution? Is there like a quota, or are there some requirements, or is it just anybody that would have access to it? Also, the revised tariff is based on the 5 bands, 5 categories based on the hours of power supply to consumers in different locations. So how is that going to be computed? Is it on an annual basis? Is it on a monthly average? So for instance, let's say Isheri, on a typical day, you receive maybe 24 hours of light, and then something happens, maybe due to power system downtime, or maybe there's a local fault and you have 2 hours of supply. Does that move you from band A to band C? I mean, how does it work? So there's still a lot of ambiguity, and I think that is what Nigerian consumers are all concerned about, that, look, there has to be some clarity as to how these initiatives are going to be implemented. But down the line, yes, it's a good idea, it's a good initiative. Well, the government is trying to bridge the metering gap and also end estimated billing, because that's what consumers are all complaining about, the fact that they are paying exorbitant prices for amount of power that if you were connected to the grid or they had prepaid meters, they wouldn't be paying as much. So I think that is the main issue. And obviously, Nigerians would welcome the meters. They're even willing to pay for the meters, just as long as there is also available power supply.
Now, Damilola, you'll agree with me that it's been quite a turbulent year, especially for Nigeria, of course, having to deal with COVID, and then now the NSAS protests, and then the aftermath of the NSAS protests. But when you look at the CBN consumer confidence for the 4th quarter, it's showing positive signs. So what's actually driving this optimism?
Well, based on the CBN's report, the survey that they conducted, that's saying that consumers are more expectant of increased livelihoods in Q4, because we know that pre the NSAS protest and the aftermath, a lot of companies were reopening, and even since then, at least this week now, we know that schools have reopened, businesses are back online. So it's that expectation of increased activity level that consumers are positive or have optimism. They're optimistic about what is going to happen in Q4. But then again, I would still issue a note of caution, because with everything that has happened, this protest and the aftermath occurred in October, the first month of the last quarter quarter of the year, and the impact was severe. So definitely it's going to affect a lot of companies, especially consumer goods, because they are the ones in the manufacturing and trade business. And bear in mind, these two sectors contracted in Q2, so it's unlikely that they're going to return to positive territory for the rest of the quarter. But hopefully, if COVID situation improves next year, the vaccine is made more widely available, global trade picks up, demand picks up, we should see 2021 a better year compared to 2020.
Let's keep hope alive now.
Yes.
But then we're not seeing a reflection on the Purchasing Managers Index as October witnessed a fall to 51.3 points. Are we going to see a slight pickup either this month or maybe in December?
Well, fingers crossed, we should see an improvement barring any unexpected events that could occur that would dampen market sentiment and affect business levels. Why the FBN PMI declined and it was for the month of October. We've talked about it, all the issues that happened. So November, December, we should see a pickup, all things being equal. And bear in mind, typically around this period, even early October is when you see shops start to place in their orders for Christmas. So you start to see a lot of Christmas decorations. You start to see people shopping towards events, end-of-year activities and whatever. So if those things happen this year, and bear in mind, they will be controlled to an extent because there are still curfews in place or restriction measures in place to guide or protect Nigerians against the spread of COVID. So obviously this would be dampening factors to the level of activity in November, December. But all things being equal, it should be an improvement over October.
Well, just before you go, let's just touch on oil once more. Of course, voting in the U.S. election is just a matter of hours away. So how is this going to affect oil prices going forward?
Very good question. Depending on the outcome of the election, for instance, if it's a Joe Biden win, we know that he is all for renewables and the shift to cleaner energy. And he is also most likely going to revisit the Iranian nuclear deal. So that means that if he wins, Iran's oil may come back into the market, and the market is already oversaturated, so we're going to see increased supply. Also, he's already initiated the point that he may ban fracking, especially on U.S. federal lands. That also would affect U.S. oil production. So looking at his own energy reforms, it appears bearish for oil prices. But if it's a Donald Trump win, we know that status quo is going to continue. But more importantly is the outcome. If the outcome is disputed, that could lead a sell-off in the market and it would affect oil prices and even the financial markets generally.
We'll see how everything goes. Head of Research at the FDC, Damilola Kibami, thank you for coming on the program.
Thank you, BC.
And let's tell you more about oil prices. Now, they held steady in early trade today ahead of the U.S. presidential election, retaining their steep overnight gains, but capped by demand concerns and worries about rising supplies. Hopes that major producers would hold back from ramping up output helped to lift prices in the previous session, while the market faces surging coronavirus cases, rapidly rising Libyan supplies and uncertainty about the U.S. election outcome. We're looking at the prices now. Brent crude futures inched up 1 cent to $38.98 a barrel, while U.S. WTI crude futures were up 8 cents to $36.89 a barrel. Both benchmarks actually gained nearly 3% on Monday. Now, let's bring in Edidiong Iwan to run us through yesterday's numbers at the Nigerian equities markets. Good morning, Eddie.
Good morning, BC. Well, sadly, the market began the week and the new month on a sour note as sell-offs in banking and oil and gas stocks made the market record its first loss in 7 consecutive sessions. Now, you know, BC, that it was only a matter of time before profit takers showed up in the market to book some profit. But the market declined 0.17% yesterday, with the all-share index at 30,497.39 points, while the equity cap was at 15.931 trillion naira. Activity was lower yesterday. Volume was at 376.65 million units, worth 3.80 billion naira, traded in over 6,000 deals. Fidelity Bank was the most traded stock by volume yesterday, while Zenith Bank was the most traded by value. And it will interest you to know that Zenith Bank contributed over 1 billion naira to the total volume that we're seeing there. Now, sectoral charts was mostly negative yesterday. Banking was down, consumer goods was up, industrial goods and oil and gas were down, while insurance was up. But let's talk to David Adonri, a stockbroker at High Cap Securities, for more. Good morning, Mr. Adonri. Thank you for joining us on the program.
Thank you. It's always a pleasure.
Let's talk about some earnings now. Fidelity Bank is the second lender to release its earnings, and unlike the first lender that we saw, the earnings were not as impressive. Could you talk us through the numbers?
Okay, well, Fidelity Bank has always been a mid-stable, high-performing bank. But, the effects of the economic downturn that has plagued both the domestic and global economies affected a lot of business activities in Nigeria. So that may have slowed them down. But the good thing really is that they still came up with robust profits at the end of third quarter. So that may have impacted positively on the demand for the stocks, and hence the price appreciation that we experienced yesterday.
We're still talking about earnings now. We saw two consumer goods release their earnings yesterday. That was Dangote Sugar and Northern Nigeria Flour Mills. Now, we saw these stock prices gain on those two stocks. What stood out the most for you in the earnings?
I think that of Northern Nigeria Flour Mills was actually outstanding, because that is a company that has been a loss-making enterprise for a very long time. And so for the company to emerge from losses to profit is a wonderful development, and that has been reflected in demand for stocks. Of course, Dangote Sugar is one of the premium stocks in the equities market. It's been very consistent with high performance. And so it was not surprising that the last quarter result was a very remarkable improvement when compared to the same period last year. So Northern Nigeria Flour Mills, Dangote Sugar are high flyers that are whetting the appetites of investors, and the market is also reacting by demanding for their stocks, hence the price appreciation.
Mr. Adonri, what are the opening calls in the market today, and is it likely that we'll see the same negative sentiment?
Well, the reaction by investors is not a thing that, of course, indefinitely after a while, the reaction will end. But for the market generally, we have seen some profit taking, but yet the macroeconomic forces that propel the market to this level continue to persist, because we still have a financial economy that is where the liquidity is very, very high. And because of the low absorptive capacity of the real sector, so we have a lot of financial assets flowing into equities. So we are still likely going to see a stable equities market until realignment of the forces within the financial economy that will balance both the debt and equities segments.
All right, Mr. Adonri, thank you for your input on the program. David Adonri is a stockbroker at High Cap Securities. I'll have to leave it there for now, but I'll be waiting for the fixed income market review, BC.
Absolutely, and we'll join you then. But that would be after we take a trip to London to see what's happening there this morning. Please stay with us. And here comes Juliana Olayinka with this morning's business headline analysis coming from the UK. Good morning, Juliana. Now, the number of furloughed workers in the UK is expected to more than double this month to as many as 5.5 million. And that's as the government places England into a national lockdown. How prepared is the government to handle this? All right, Juliana, I was asking how the government is prepared to handle the situation as the number of furloughed workers in the UK is expected to more than double this month to as many as 5.5 million. All right, we seem to be having issues connecting with Juliana. Maybe we should just take Eddie Dung to take us through the debt and currencies markets while we wait to reconnect with Juliana. Over to you, Eddie.
Thank you, BC. Well, just before we go to the fixed income market, the negative sentiment also spilled into the unlisted securities market yesterday as the NSI declined 1.60% to 718.57 points, while the market cap was at 527.84 billion naira. We saw about 172,503 units worth 18.58 million naira traded in 4 deals. Now, the bond market was bearish yesterday as yields declined by about 10 basis points. Now, we saw declines on the short, mid, and long end of the curve following interest in the 23 February 2028 deals. We had 18 deals on that counter worth 8.06 billion naira. But let's quickly talk to Ramat Baba, the chief dealer of fixed income at FBN Quest Merchants Bank. Good morning, Ramat. Thank you for joining us on the program.
Good morning.
So the DMO issued a circular of the FGN savings bond for November. Now that began yesterday and will be closing on November the 6th. Can you tell us more about the calendar and how that is likely to shape trading this week?
Okay. So first of all, the savings bond is really for the retail end of the market because the volumes but they are usually thousands and a bit of millions compared to the conventional bond market, which is mainly for institutional clients and probably the maybe HNI clients. For that market, whatever is sold there doesn't really affect, it really doesn't have much impact on the fixed income secondary market, just for the simple reason of the people investing there at the low end of the retail, while the people trading in the secondary market are mainly the HNIs. Also, like I mentioned before, the people that trade in the secondary market are either HNIs or institutional clients, and the minimum trading size is usually 100 million and then above. So we really do not expect that to have any major impact in the bond secondary market as demand continues to come into the market. Yields continue to drop further. Currently, we see the 20, 30-year curve trading below around 7%, 6% levels. Demand has continued to creep in consistently. Also, another factor is that liquidity remains really high. Opening yesterday, system was over in excess of 600 billion, and we keep seeing demand coming into the market.
So is there any other market news that's likely to shape trading this week?
Yes, there is the retail FX, which should be taking out a lot of that FX sales by CBN. That should be taking out a lot of liquidity from the system. At least about 400 billion should be leaving the system. Of course, there will be some inflows for refund coming into the system, and then there will be debit. Also, CRR debit is expected on Friday again, and that should take out a lot of liquidity. It's expected to take a lot of liquidity from the system. Of course, that is not certain. It's all based on what the CBN decides to do. So we expect rates to actually go up slightly. We might see a bit of stall in the treasury bills market because yesterday we saw a lot of activities on the treasury bills curve. We saw all 2020 bills being offered at 0% and a few offered around 0.05%, which is pretty much low. So that clearly just signifies that a lot of investors will probably just buy treasury bills even if it's at 0% as against holding cash.
All right, Ramat. I mean, FBN Quest, they usually carry out research and all of that. What is the outlook for the fixed income market this month?
This month, we expect market to continue as is right now because system remains liquid. There will be almost maturities into the system, and that should continue to beef up system liquidity. As long as that happens, we expect people to always find places to put in these excess funds. So the expectation is that activities will continue to remain a bit high in the fixed income space as people look for alternative investments for their funds and as maturities come into the system. Yields are not expected to go up. In the last calendar, in the last auction, the DMO had reduced the volume offered and sold at the bond auction. Just 30 billion was offered, and of course, we expect that might be the trend to the rest of the year, really. So as long as the volume offered remains low, we expect that yields will continue coming lower. To what level, we're not sure, but clearly indication is this is what the norm is going to be for the rest of the year.
Speaking about alternative investment options, now just like we've seen, level yields in the treasury bills market have dipped to abysmal levels. What other options do investors have? I mean, apart from the equities, what other options do investors have?
Besides fixed income, which is treasury bills and bonds, and equities, we've seen a few people buying CPs, of course. Those are money market instruments. There's been a few issues of commercial papers in the market recently, and most of those issues have been oversubscribed because most of them have been offering around 2.8 levels for 120-day papers, which is a very decent pickup from maybe 0.1% on treasury bills. So we've seen funds flowing to this level. Also, a few companies are coming into the debt market to raise for bond issuances and all that. We expect this to also be maybe oversubscribed as people continue to seek alternative investment. Besides that, it might probably just be real estate, to the best of my knowledge.
All right, Rama, thank you for your input on the program. Ramat Baba is the Chief Dealer of Fixed Income at FBN Quest Merchant Bank. Well, we'll just continue with the market review. Now, yield in the bond market, just like we had said, had gone to, they increased yesterday. For example, the 26th of April 2049, as a Friday, this was at 201.29, and then yesterday dipped to 197. On the 23rd of February 2028, this was at 165.25, and that rose to about 167.67 points. Well, we'll just keep our fingers crossed and hope for a positive trading day today, BC.
Absolutely, Edith Young, thank you. We'll see where the markets will go at the end of the day. Well, now we have Juliana Olayinka, who's back with us to tell us what's happening in the UK this morning. Finally, we have you, Juliana. Well, I was asking that the number of furloughed workers in the UK is expected to more than double this month to as many as 5.5 million as the government places England into a national lockdown. Tell us how prepared the government is to handle this. Well, please do that in just 1 minute.
It's really difficult to say whether or not they're prepared. I think their critics would say they're not prepared, but this isn't a new scheme. It's the old scheme that will be extended. They've been doing this furlough scheme for 9 months now, haven't they? It's expected in the month of November to cost £5 billion. At its peak, it had about 8.9 million people using the furlough scheme. We're not expecting it to be that much, and that's partly because so many jobs have gone. That's it in 60 seconds. I'll make sure I give you an update later today.
Absolutely. We'll look forward to having you at 1:30 to tell us more. And hopefully the technology will be much better by then.
Thank you, Bessie.
And that's where we wrap up today's program. Thank you for watching. I am BC Adebayo.